Hi everyone, Nick here. Should you invest in dividend stocks or index funds? This is a question many new investors have, and it's subject to heated debate amongst experienced investors. We're going to look at the pros and cons of these options and see if we can determine which is better. While dividend stocks and index fund investors clash over which is better, there is one thing they agree on. It is key to unlocking amazing dividends, and this is smashing the like button for the YouTube algorithm. Smashing the like button also helps support free financial education on YouTube. Subscribing to my channel will make sure you don't miss out on the latest videos. First, we need to look at how a company uses its profits. It typically does this in one of two ways. One way is to reinvest in the company, which should produce higher returns in the future. It could do this through research and development, investing in new products, mergers or acquisitions. The other way is to return capital to shareholders. Maybe the company is just making so much money that it's going to distribute some of the profits to shareholders. Companies typically do this in one of two ways. One way is paying a dividend to the shareholders. They just take some of their profits and distribute it to the shareholders. The other way is through buybacks, where the company will buy its own shares, which should drive up the value of the company's shares. Both are effective ways of returning capital to shareholders, where there are subtle differences. In one case, you're getting a payment directly. In the other case, your share price is just increasing in value. Next, let's look at diversification. Here is an argument you see between dividend investors and index investors. Dividend stocks lack exposure to big growth companies. You're dumb for missing out on all that growth in companies like Amazon or Tesla. Index funds include bad companies. You're an idiot if you want to invest in crappy companies. Remember JCPenney and Circuit City? Why would you invest in these companies? I'm going to tell you why I don't think either of these matter. The market has already adjusted for this in the price of these stocks. If you have a company that is expected to have massive growth, its price will be higher. If you have a company that many people think is in trouble, may even possibly go bankrupt, its price will be lower. The market tends to balance this out so that your return on investment is similar in the good versus the bad companies. Fun fact, Apple was once one of those bad companies that filed for bankruptcy. It has since been one of the most profitable companies in the world. What I do think matters is that a dividend stock portfolio will be less diversified than the market index. This is because not all companies pay dividends. I like more diversification, as I don't want too much exposure to single companies. A total stock market index fund will diversify your investment across a few thousand companies. However, there are some people that prefer to invest in just a few solid companies. Next, let's look at fees. If you have a dividend stock portfolio, you typically pay no fees if you're using a platform like M1 Finance, link below. If you buy the stock and hold it for the rest of your life, you will never pay a fee. On the other hand, index funds have fees, but they are so low they are next to nothing. If you had $1 million invested in VTI, the Vanguard Total Stock Market Index, you would pay $300 in fees per year. This could add up. However, I would argue the amount of time you would spend choosing which dividend stocks to buy and rebalancing them probably has a higher cost in your time than the fees. If you enjoy stock picking or rebalancing and tinkering with your portfolio, that's great. You may not want to account for this. However, index funds are much closer to autopilot. Next, let's look at performance. In general, companies that pay dividends and companies that don't have historically had nearly the same performance. Some people suggest that dividend companies have had higher returns, but this is typically due to other factors. like companies being smaller, more profitable, or being higher value. When you isolate for these other factors, the fact that a company pays a dividend is not shown to produce a higher return. With an index fund, you get the market return. This is mathematically certain to outperform most investors according to a few Nobel Prize winning economists. With dividend stocks, you get the chance to outperform or underperform the market. It's gambling. If you make a great pick, you get a higher return. If you make a bad pick, your return is worse. Some people may be knowledgeable enough about stocks or industries where they believe they know better than the other millions of investors and professionals that are trying to do the same thing. If you happen to be smarter than everyone, or just lucky, picking individual stocks could be great. Next, let's look at taxes. This is an often overlooked area of investing. Taxes are probably the largest expense you will pay in your entire life. They should be at the center of all investment decisions. Now, I'm not going to give you tax advice, but here are a couple factors. In the US, there is currently no immediate tax benefit of dividends versus long-term capital gains if you're holding the stock for more than 1 year. The tax rate for dividends or long-term capital gains is currently the same. In retirement accounts, a dividend versus a capital gain usually doesn't matter, as you either don't pay taxes or you just pay taxes once you withdraw your money in retirement. Now, what about taxable accounts? With a dividend, you definitely pay the dividend tax now. With growth companies that don't pay dividends, your share price will increase and you'll pay a higher long-term capital gain when you sell. Now, the important distinction here is whether taxes will go up or down in the future. If they go up, you could have locked in a lower tax now on your dividend versus having it locked into a higher value share. However, if you never sell the share, you never pay the tax. So you might be able to avoid the taxes altogether, especially if you plan to leave your shares to someone as an inheritance. In the US, I don't believe dividends versus capital gains matters that much. For some people, it may be better to pay the taxes now and keep the lower share price. For others, it may be better for the shares to increase in value and defer the tax until they sell. Now, some countries in the world tax dividends and capital gains differently. Some will even allow you to deduct your share of taxes paid by the company on your own tax return. If you live in one of these countries, it could make a big difference on which one is better for you. The prospect of getting dividends every quarter or year can be very attractive. It's like getting an extra paycheck, and it can be very motivating. After all, I love it when I receive dividends from my index funds. In my 401k, I have institutional shares of an index fund that doesn't pay dividends. It just keeps the value in the fund. I definitely miss these dividends as I don't see them adding up every year when I total up how much dividend income I made. However, I know it doesn't really matter as the value of the fund is now much higher. I think dividend investing can be a reasonable strategy if you really value this type of periodic income. It may give you enough of a psychological boost that you are more likely to invest or stick through a market downturn. However, given that there is no reason to believe that dividend stocks will produce a better return or tax benefits, I don't believe there is a strong reason to be purely a dividend stock investor. I like the ease and simplicity of index investing. I don't need to swing for the fences to meet my financial goals by trying to beat the market return. With the income from my job, my portfolio is growing enough to where the dividends from my total stock market index fund will pay for all of my expenses in the matter of a few years. I don't need to put that at risk just to try to get there a year or two early. My 3-fund portfolio, which I'll link up here, provided a 19.6% return last year, which is well into the six figures. That's good enough for me. Instead of using my time to try to pick stocks, I'll use it to increase my income so I can buy more stocks. Thanks for watching, everyone. Comment below and let us know what you think about dividend stocks versus index fund investing. If you got value from this video, don't forget to smash the like button and then subscribe so you don't miss future content. If you know others who would benefit from this video, don't forget to share it with them. Thanks again. Later.